Hey traders, Rishi Patel, co-founder, Master the Markets, the Elite Traders Conference and the Traders Open Day. And on this video, I want to talk to you about the 3 things that every beginner trader must know. Through our time of mentoring traders through the early phases in their journey in the financial markets, we've come across a couple of things which we found are absolutely business critical for them to get up and running and make the very best start that they can. So the first thing that we feel that it's important to know and have in your horizon is that trading can be fully automated. So automation is really the first thing that you need to know about. What do I mean by automation? Well, when we place the orders, when we place our trades, we place them using a brokerage account. And that brokerage account can be selected from any brokerage account that's available. Make sure you check out our other video on how to select a broker account. But in the meantime, you need to look out for the automation feature. Now what that does, it allows you to place orders to open. So where it gets to the point which the market has not necessarily traded at a certain price, you will look to get entered at that exact price. So let's say, for example, you want to buy the market at 110.15 and the market is just trading at 110. You can place what's called a buy stop order on an automated basis to open. So you don't actually even need to be at the computer. All of your orders, your entries, your stop losses, and your take profits can be fully automated. So automation is the first feature that you can use to make your life much easier, and it's an essential tool that every beginner should really have on their horizon and ideally should even be using as well. The second thing is risk management. Now this is absolutely critical. When we teach in the Traders Basecamp, we teach over the 2 days and we tell our beginner traders to repeat this 3 times, that you must risk manage your positions down to 1%. And what do we mean by 1%? We mean that if you have, for example, a £20,000 trading account, that you actually look to only risk £200 of that. So for example, a £20,000 trading account just here, we'd risk only on that particular account just £200. So this, what it does is it keeps us safe and secure in the market. Now where we're trading the market, we'll position using automation, again using automation and using a buy stop, an entry order, let's say to go long, as well as a sell stop, which can be your stop order, all of course automated. And we can use these orders to actually manage the risk between the actual entry and the stop loss. We can use a position size calculation, which we've probably explained in the Trader Starter Pack. For those of you that haven't seen that, it's all on there, which will teach you actually how to do a calculation to risk manage this all down to just 1% of your account. So we're only going to risk £200 of our account's capital on any given trade. Now that keeps you safe and secure in the market. Now what's the third thing that every beginner trader must know? Now the third thing that every beginner trader must know is absolutely imperative to give you an edge in the market. Now where we're trading the market, we're doing it very strategically. Remember, it's a mathematical game. It's a game of probabilities, and what we do is we stack those probabilities in our favor. A good way of thinking about this may be if you are, let's say, playing blackjack, for example, as a good example. What you're looking to do when playing blackjack is you're looking to risk manage, first of all. Secondly, you're looking to stack odds in your favor. So if you have some kind of a strategy up front, then you can actually do that and give yourself an edge in the market. So you can actually do that pretty easily by having an edge in blackjack. The way we have a risk, the way we have a edge in the financial markets is when we actually have what we call a reward risk calculation. So the reward risk is actually something that we use to give ourselves an edge. We ask for a reward risk of 2 to 1 or better. What does that mean? So let's say, for example, we take 10 trades and we use our account here of £20,000. Now let's say we trade the market over a period of 10 trades and 5 of these trades we make money on. The other 5 we lose. So what happens? So where we actually lose money, we already know our maximum risk here is £200. So we look to lose a maximum of £200. However, when we actually make money in the market, we're looking for a reward risk of 2 to 1, meaning I would like to get double what I'm risking on the market. So I'd like to get a return of £400 on each winning trade. So where I take a trade, if I lose £200. If I gain, I'm up £400. Now let's go back to the example that I gave, which is we take 10 trades, we win 5 of them and we lose 5 of them, and have a look at what happens. So again here, minus £200. And again, another trade we take, let's say minus £200 just there. And then we take another trade, it gives us net plus £400 just there. Another profitable trade gives us net £400. So we continue to do this, and over a period of time, you'll see that again, a profitable trade of net £400 and a final profitable trade there of £400 again. And then what happens as a result of taking 10 trades, that's 8 so far, so we have a minus 200 and we have another minus 200 there. That's 10 trades total. Now when you add up all of the losing trades, what tends to happen is you get a minus 1,000 because you have 5 losing trades of £200. You get your net losses of minus £1,000. Now you also have net profits here of plus £2,000. So you've got £400 times 5 profitable trades. So you'll have then net profits of plus £2,000. So where you take away your losses from your profits, you'll see you'll end up with net £1,000 profit. Even though you've taken 10 trades in the market and 5 of them have been losers and only 5 winners, so your reliability on that strategy was just 50%. But because you had an edge in the market with a reward risk ratio of 2 to 1 or better, you finished net profit. So these are the 3 tools that all beginner traders should look and have on their horizon. Automation, which the broker will offer. Risk management, down to a % of your trading capital. Don't risk more than a certain amount of your trading capital. And for beginners, we always recommend 1% risk. In the Traders Base Camp, we ask all our beginners to repeat 3 times that I will never risk more than 1% of my trading capital. I will never risk more than 1% of our trading capital, and I will never risk more than 1% of our trading capital. So we ask them to say that because that re-ingrains the actual thought and the actual belief to make this all work. So that's the maximum risk. Now the reward risk, as I said, is 2 to 1. So where we risk 200, we're looking to make net 400 on each individual trade. So these are your 3 tools that every beginner trader must know. My name's Rishi Patel, co-founder of Master the Markets, Elite Traders Conference, and the Traders Open Day. And as we always say, until the next time, stay disciplined, follow your plan, and trade like a master. Bye for now.